It is Thursday, January 26, 2017, 10:15 p.m. And this will just be a really quick video, not on any particular pair, but just more on a couple of Elliott Wave things I've gotten questions on. Here we go. First of all, just showing you this. Risk associated with Forex trading. There's a lot of risk. It involves leverage. Leverage can work for or against you. You can lose all of your investment or more. And so be careful. The bottom line is I got in quotes in the yellow here. In other words, don't take any trades based on my analysis or views. This is for educational purposes only, and you need to make your own trading decisions and make your own judgments about risk and market direction. Okay? So, there's a lot you can learn about Elliott Wave, but there are 3 cardinal rules, and I'll show it to you on a chart here in a second. So, there's a lot of things that there's a lot of guidelines and things that you can look for and use as probabilities, but these are the 3 cardinal rules of Elliott that you cannot violate. Okay? And number 1, wave 2 must never trace, that's supposed to be retrace more than 100% of wave 1. Wave 4 must never enter into the price area of wave 1. And wave 3 can never be the shortest of the impulsive waves. It doesn't have to be the longest, although it usually is, but it certainly cannot be the shortest. Okay? So I want to show you on a chart. This is really a textbook trend here. So here's the Swiss yen. I happen to be on the 30-minute chart here. Okay, now I also want to say that labeling the chart is not the most important thing. Okay? Alright, trying to fit in waves in terms of labeling like this is not the most important thing. Okay, recognizing the structure and the patterns is much more important, because impulsive waves can be more than 5 waves. So this is an MT5 platform, so it's got the Elliott Wave labeling tool on here. That's how I got these. Okay, that's this indicator right here. Well, it's not an indicator, it's a labeling tool. Okay, but impulsive waves can be more than 5 waves. It can be 5, 9, 13, 17. They're multiples of each other. Okay, so it's not always 5. And if you have a really strong trend, you certainly could count more than 5. But in this case, this has 5. And so just for the ease of argument, I'm going to show you this. Okay, so you see I have 2 sets of labels here. The purple is the main trend, okay, of this whole move. The blue is just the wave 3. Okay, so we could take this off for now, actually, just not to confuse things. Alright, so this is how I see this. So here's wave 1, wave 2, and then we've got 3, and then we've got 4, and then we've got 5. Okay, so rule number 1, wave 1, go back to here, wave 2 must never retrace more than 100% of wave 1. Okay, so here's 1, 2, that's how I'm counting this. So here's the 1 up and the 2. Now if you go to a lower time frame, you'll probably see a trend in here and a correction down. But this move down cannot retrace more than 100% of this move, which it did not. So you didn't violate that rule. Okay, the next rule is wave 4 cannot enter in the price action of wave 1. Now this is a very small wave 1, but that means this wave 4 right here, where it goes down to here, if for some reason it came way down here and entered into the price area of wave 1, that would violate the rule, the Elliott rule. And so if it did that, you're looking at something other than an impulsive wave. You could be looking at an ending diagonal, you could be looking at some kind of corrective structure, but it wouldn't be an impulsive wave. Now you're saying, well, this is never going to go all the way down here. Okay, in this particular example it didn't. But sometimes you have, generally you have a bigger wave 1 than this. And so it's not unreasonable for wave 4 to come close but not violate it. In this case, it's not even really close. But wave 4, which is this wave here, this ABC down, cannot go into the price area of wave 1, which this did not. Okay, and the third cardinal rule, wave 3 can never be the shortest. It's usually the longest, but as long as it's not the shortest. Well, here's your wave 3. This is clearly the longest of these, of wave 1 and wave 5, which is probably still in progress, but nearing an end, I think. So this is the longest, and so that's fine. Now again, it doesn't have to be the longest as long as it's not the shortest. Most of the time, if you look through charts, if you identify a pattern like this, an impulsive pattern, you're going to find that wave 3 in 9 out of 10 times is the longest. Now what I've found is that if wave 5 is longer, you have an extended wave 5, then that suggests there's a lot of back-end momentum to that trend, and that's probably where you will see additional waves forming. So you'll get more than 5, so you'll have just continuing move up. You'll make small corrections go up, small correction go up, and you just keep going. I think the Aussie kind of looks like that right now. Let's see here. One of these. I was just looking at it. Darn it. I don't know. I should have had this ready. But the Kiwi. If you look at this Kiwi, look at this move up. You notice I'm not really counting waves here because there's more than 5 waves here. You can draw a trend line right up here. And you see what's happening. Can't really draw this exactly, and again, it's not really important. But 1, 2, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's still going until it takes out one of these lows. Then I'm going to assume that every time it comes down here, whether it touches this trend line or not, it's going to bounce up again until there's divergence or something happens to push this through. This may have one more move up. So this is what I'm saying about sometimes where you can't really see 5 waves. It's hard for you to actually pick out 5 waves here. They're all about the same length, and it just keeps going up and up, just stepping up. Okay, so that's an example of where it's not always important just to count the waves, but just to observe the structure. In this case, this one's very obvious. Okay, 1, 2, 3, 4, 5. Okay, and this probably will have a correction down. I think this will make another push up, and then we'll see a correction down. And usually the correction comes back to at least the termination of the last wave 4. So once this makes a high, assuming that the trend ends, it probably will come down to, somewhere in this area, somewhere in here. Okay, in some kind of an ABC pattern. Okay, Elliott Wave ABCs, it would be something like an A wave down, and then a B wave kind of retracing that, and then a C wave back down in some kind of gentle sloping pattern. So maybe something like A, then you get a B up, then you get a C down, something like that. Okay, now you can say, well, isn't that a 1, 2, 3? And no, it's not, because it follows a completed trend, so this will be a correction. Okay, unless of course this move up was part of an end of a correction on a larger time frame. But we'll just look at this in a vacuum right now. That correction down like this would be considered an ABC. Alright, so in this case, A, B, C. Okay, so back to somewhere into this area, and then you could potentially look for a long again. Now, if I trade corrections, and I do occasionally trade a correction, to me the best wave of a correction to trade is the C. You could trade the whole thing, but if you're not sure how it's developing, the C is really usually the longest of the waves. It's usually at least as long as A, sometimes longer. So you certainly can trade the correction. You go to a lower time frame. This is a 30 minute, so I don't really want to go too much lower than that. But if you were up on, like, say, the 4-hour and you saw this pattern on a 4-hour chart, go down to, say, the 1-hour, look for the correction. You can see the waves within that correction, and you can trade that down. Okay, so if you wanted to, or you could just sit and wait for the correction to end and then look to get back long again. You know, there's no right or wrong way to handle that. So I'm just seeing if what else this thing might be doing on a higher time frame. But that's a discussion for another video. But so like I said, guys, there are lots of things to learn about the wave principle. But like I said, the main thing to take out of this is, you know, the 3 cardinal rules for Elliott that you cannot break. These are the only hard and fast rules. The rest of them are guidelines, but they're not rules. But those are the 3 hard and fast ones. And the fact that labeling is not the most important thing. It's more about the structure. Now, if you see something like this should stick out to you on a chart. Okay? The other thing is, don't get hung up on just one time frame. Okay? You don't want to say, well, you know, I only trade on the 1 hour, or I only trade on the daily, and so I don't care what's going on the other time frames. Okay? That's incorrect, because I use MT5 as my demo. I don't trade on this account. You know, this is a live account. I actually don't have any money in here. I was going to, but so basically I use this for analysis. But my live account's in MT4, but MT4 doesn't have all these extra time frames. You know, as you know, it goes up to the 30, then it goes 1, 4, daily, week, month. So you lose the 3, 4, 6, and 8, and 12. And so as you click through these, okay, you have to find the structure. You know what? Let me see while I'm talking here. I'll just bring up another Swiss yen. I just don't want to. Okay, so here's that trend again. I just want to take off all the indicators. You know, as you click through here, you know, you want to be able to see this trend, okay? And this will allow you, you know, to see that trend, right? So, you know, if I'm here on the 12-hour, this trend right, I don't really see it. I start going down, and it starts revealing itself to you, okay? All right, and, you know, it starts to reveal, get down to the 30-minute. You know, now you can see this, okay? Up here at these higher time frames, there might be another trend going on, but, you know, you have to adjust the frequency of these time frames until you can see something. All right, now here we are on the 3-hour. To me, this could be an ABC. So this move up we were just looking at, okay, is a potential wave C up, because this whole thing could be an ABC. So in other words, I see a 3-wave structure right here, okay, ABC. When this completes, this may turn around. So this move up we were looking at on the 30-minute could be the end. Here's that C. You can't see it, it's too far off the chart. Okay, here's the end of this wave C. Okay, so you have a 3-wave move up. This could very well turn and go back down again. Okay, if I zoom out a little further, okay, then we had this move up right here, 1, 2, 3, 4, 5, again completing a trend, okay, and then turn around and go down. All right, so that's what I'm saying. You know, you got to go to the time frame where you can see the pattern. Now, if you say, well, I only trade on the daily, in this particular case, that would be okay, because you can clearly see the trend on the daily. You know, you've got a 1, 2, 3, 4, okay, and then looks like we're probably going up for 5 here, which is what we were looking at, okay. And this is maybe that wave 3 of 5, okay, going up. This is what we were looking at on the smaller time frame right here. This action is what I had labeled back on the 30-minute. So this is 1, 2, 3. So this might be 3 of this wave 5 up, which means this will go up, then we'll get another small correction, and it'll go up again, and then it'll probably turn down. Okay. So So before I was thinking maybe this was an ABC, but now when I zoom out and I look at the larger time frame, this probably is a 1, 2, 3, 4, 5. Okay, so again, that's the importance of adjusting the frequency so you can see the pattern on the chart. And it's not so important that I label it, although this is an easy way to label, because you can clearly see you got a 1, 2, a very long 3, and now, you know, an ABC for 4, and now we're heading up for 5. Okay, so the bottom line on this pair, I'm looking for longs for now. If I was going to trade this, I'd be looking for longs, and then at some point when this gets, let's see how long this wave 1 is. It's about 360 pips. 360 pips. The wave 5 takes you somewhere up to about this 115.90 area. Okay, so I'm going to be looking for longs up to about the 115.90 area, which is about another 100 pips away, and then I would expect that the trend would end at that point. Alright, so it'll probably keep moving up here. Probably won't end this week. Tomorrow's Friday. Probably be early next week, and we'll see this trend end. Okay, so there it is on the longer time frame. You got a long. Let me go back to the 30-minute. Switch the end. Yeah. Go back to the 30-minute. This is that what we were looking at on the daily chart. That's the first that move up. 1, 2, 3, 4, 5. We're approaching the end of wave 3. So this whole thing is the wave 3 on the daily chart. So what we just saw on the 30-minute is this move up right here. Okay, it'll go down a little bit more, it'll go up again, and we'll get a small correction, and we'll go up for wave 5. So this is wave 3 of this wave. This is the third wave of this wave 5 up. So 1, 2, 3, 4, 5. This is the third wave on the daily, okay? But on the 30-minute, this is that view of this going up. So here's that wave 3 in more detail here on the 30-minute. Okay, so this is what they call fractals, guys. This is where the wave principle is so great, because you can see the trends, the subdivisions within the trends. Okay, and if you see, you know, on the daily chart the trend is up and it's not over yet, then you know on these lower time frames, it doesn't mean you can't trade it short, but just understand that keep the picture in mind of what the longer trend is doing, which is still up. Okay, and that you're going to have to keep that in mind, that when you do have a down move, it's going to be limited until this pattern completes. Now let's say this finishes at wave 5 up here somewhere, then this is going to probably be a substantial move down. Okay, so at some point this pattern will end off the chart here, and then it will come down. But in the meantime, you have to respect the longer term pattern on the daily chart. Okay, so that's kind of more than I wanted to show you. I really just wanted to do this and give you a little introduction, and again make you understand that it's not about the labeling. It's about observing the patterns, finding the right time frame where you can see the pattern, and just going with it until such time that that the trend ends or the correction ends. So that's it, guys. I'll make some more, but hopefully that'll help you a little bit. Next time I'll show you a couple of resources that you can use in order to read up on Elliott Wave, both online and in print. Alright? Have a good night, guys. I'll talk to you all soon.